This week, markets were driven by three big stories. The US Federal Reserve cut rates for the first time this year. The UK's borrowing levels hit a worrying new high. And Jaguar Land Rover was forced to halt production after a major cyber attack. Let's break it all down. On September 17th, the Federal Reserve cut interest rates by 25 basis points, bringing the target range down to 4.25%. This was the Fed's first cut since late 2024, a move officials described as risk management. Why? Because the labor market is weakening, with unemployment now at 4.3% while inflation remains stubbornly above the Fed's 2% target. Markets were divided. The Dow rose 0.6% as traditional industries welcomed cheaper credit. But the S&P 500 slipped 0.1% and the Nasdaq fell 0.3%, pressured by rising treasury yield. Meanwhile, mortgage rates fell to 6.26%, boosting refinancing demand. For households and businesses, borrowing just got a little easier, but inflation is still eating into budget. Globally, lower US rates can ease financial conditions in emerging markets, but persistent inflation risks mean uncertainty is far from over. Over in the UK, the numbers were troubling. Public sector borrowing hit £18 billion in August, the highest August figure in 5 years and well above forecast. The overshoot came from higher debt interest, rising welfare costs, and inflation-driven spending. Markets didn't like it. The pound weakened against the dollar. Gilt yields climbed as investors worried about fiscal stability. For households, insolvencies in England and Wales jumped 16% year-on-year, highlighting growing financial stress. For businesses, higher energy costs and weak demand raise the risk of more corporate failures if taxes rise or spending is cut. The UK government faces a dilemma: tighten too much and kill growth, or do too little and lose market credibility. The autumn budget will be a crucial test. And finally, a shock in the auto sector. Jaguar Land Rover, the UK's largest car maker, was forced to pause production at its factories after a major cyber attack. Operations are expected to stay down until at least September 24th, meaning a total shutdown of about 3 weeks. The impact: Tata Motors shares fell about 1% in Mumbai. Suppliers across the UK faced disruption, with 100,000 jobs indirectly tied to JLR. Customers may face longer wait times for high-demand models like the Range Rover and Jaguar EVs. Beyond JLR, this is a wake-up call. Cybersecurity isn't just an IT issue, it's now a core part of supply chain and financial stability. A quick recovery could limit losses, but a prolonged outage risks delaying JLR's electrification strategy and denting investor confidence. Now, how can we conclude all of these news? So, what happened? The Fed cut rates, balancing inflation and a weaker labor market. The UK's borrowing overshoot rattled investors ahead of the autumn budget, and Jaguar Land Rover's cyber attack highlighted just how vulnerable global supply chains have become. The common thread: uncertainty. From monetary policy to fiscal credibility to cyber security, markets are being tested on multiple fronts. Now, thanks for watching. Don't forget to like, subscribe, and stay tuned for more weekly market breakdowns. Goodbye.